It is few minutes past 5 p.m. East African time, and it's time for Markets Today right here on Metropole TV. My name is Nina Shaban. Let's get right into it. Leicester Telco Safaricom recorded a pre-tax profit of 91.8 billion shillings during the financial year ended 31st March 2019. This denotes a 14.9% jump in profitability that was achieved on the back of a 7.1% increase in revenue during the period under review. Revenue from Safaricom's M-Pesa money transfer service, which currently accounts for 31.2% of its service revenue, grew by 19.2% to 74.99 billion shillings. Meanwhile, Kenya is optimistic that there will be no disruption to trade with the United Kingdom as it charts its way out of the European Union. Foreign Affairs Cabinet Secretary Ambassador Dr. Monica Juma has said Kenya expects to its exports to the UK to continue accessing the UK market on a duty-free, quota-free basis. The Foreign Affairs CS said this during a joint press conference earlier today after hosting the Foreign Secretary of the United Kingdom, Jeremy Hunt. The government is seeking for prospective investors to undertake oil exploration in 35 exploration blocks believed to have potential for petroleum production. The Ministry of Petroleum and Mining has revealed this 5 days to the start of a 3-day oil and gas conference that will take place in Mombasa next week. At least 1,000 delegates from the oil and gas industry are expected to attend the upcoming 9th East African Petroleum Conference and exhibition that will begin on the 9th of May. The Kenyan shilling remains stable against the US dollar, helped by the dollar inflows from offshore investors buying government debt and reduced demand for dollars by oil importers. According to Reuters, traders have quoted the Kenyan shilling at 100 shillings and 90 cents buying and 100 shillings and 10 cents selling, compared with 101 shillings and 10 cents buying and 101 shillings and 30 cents selling on Thursday's close. And with that said, let's now take a look at the indicative exchange rates for selected currencies. All right, inflation in the Eurozone jumped to 1.7% in April, the Eurostat data agency showed on Friday, fueled by a surprise surge in prices in Germany, AFP has reported. Analysts surveyed by a data company, Forecast, had predicted a more modest rebound to 1.6%, up from the 1.4% logged in March. A rise in prices was expected due to the late timing of the Easter holiday, but the final number exceeded expectations, though a drop is expected later in the year as energy prices fall. The price spike will be welcome news for the European Central Bank, which has delivered years of ultra-low interest rates and pushed trillions of euros in stimulus towards stoking inflation across the 19-nation Eurozone to its target of just below 2%. Central bankers will also closely evaluate the rise in the core inflation, which strips out volatile prices such as energy that reached 1.2% in April, up from 0.8% in March. The rise of inflation comes as worries grow about the European economy. Through growth data on Tuesday showed the Eurozone was not in the immediate risk of falling into a recession. Germany and Italy account for much of a feared slowdown, with export-oriented Germany suffering the effects of the US-China trade war and Italy expected to stagnate owing the high debt levels and muted domestic demand. Before Friday's data, Eurozone central bankers last month slashed their price growth predictions, seeing inflation rising from just 1.2% this year to 1.6% in 2021 consistently off the 2% target. Economists blame the persistently low inflation on the failure of wages to rise along the expanding economy, which has dampened consumer demand. The United States had another giant month of job creation in April, with stronger hiring in the vast services sector and unemployment fell to a level not seen since 1989, the government reported on Friday. The blockbuster report will help allay fears of the slowing economy and cheer President Donald Trump as he seeks reflection next year. Employers scooped up workers in construction, healthcare, computer system design, administrative support, and other industries, adding a total of 263,000 net new positions for the month. That was well above the result economists expected, and worker pay continued to climb. The jobless rate fell 2 months to 3.6%, but the decline was in part because the pool of workers shrunk and fewer people were looking for jobs, pulling them out of the labor force. Average hourly pay also climbed 3.2% over April of last year, its ninth consecutive month with annual growth above the 3%, again outstripping inflation and boosting purchasing power for American paychecks. Compared to March, however, the increase in pay was only 0.2% shy of forecasts. Nevertheless, the brisk pace of hiring should dim hopes among investors that the Federal Reserve will feel pressure to cut interest rates in the near term. Hiring in the manufacturing sector also was a weak spot, with durable goods employment flat and the other auto sector continuing to shed jobs. Air France KLM said Friday its losses deepened in the first quarter of the year under the pressure of higher fuel costs and competition, although the group managed to boost passenger numbers. The net loss of the $357 million, close to 36 billion shillings, was worse than the 269 million euros loss it suffered in the January-March period last year. The Dutch-French airline group's shares fell more than 4% at the opening of trading in Paris, while the overall market was flat. The airline group managed to trim costs but said in a statement that the unit cost improvement was more than offset by unit revenue, fuel bill and currency headwinds. A key measure of performance, passenger unit revenue per available seat kilometer slid 1.9%. Chief Executive Benjamin Smith was quoted as saying in the statement, as anticipated, the first quarter has been challenging for the European airline industry, including the Air France KLM group, as substantial industry capacity growth in the off-peak business period led to unit revenue pressure. The airline's long-haul routes performed better than short and medium-haul routes, where there is more competition from budget airlines. Global stocks mostly fell on Thursday as markets digested comments from the Federal Reserve that dimmed hopes for a cut in the U.S. interest rates. Stocks retreated in London after the Bank of England pointed the prospect of hiking interest rates more quickly than expected in New York. where oil-linked shares were especially weak amid a slide in the crude prices. Traders were jolted by Fed boss Jerome Powell's assessment on Wednesday of recent weakness in the U.S. inflation as only transitory. The comments come after the Fed's latest policy meeting and sank hopes that the U.S. Central Bank would announce a rate cut later in the year. The remarks from Powell also went against the call from the U.S. President Donald Trump to ease borrowing costs to help bolster the economy. Wall Street stocks sagged Thursday for a second straight session, with weakness in petroleum-linked shares dragging further below records earlier in the week. The Dow Jones Industrial Average dropped by 0.5% to 26,307.79, and the broad-based S&P 500 shed 0.2%, closing at 2,917.52, while the tech-rich Nasdaq Composite also fell 0.2% to settle at 8,036.77. Both the S&P and the S&P 500 and Nasdaq closed at records in recent days. Analysts said the market was still digesting Federal Reserve Chair Jerome Powell's comments from Wednesday, which put a damper on expectations for the interest rate cut anytime soon. All right, now, fuel stock markets rose on Friday, awaiting a key U.S. jobs data, while energy prices steadied after a brutal week of losses. Now, at about 10:30 GMT, London's benchmark FTSE 100 index led the way with a gain of 0.8%, with traders also reacting to news that Britain's two main parties faltered badly in UK local elections as voters vented their frustration with the prolonged Brexit dreadlock. All right, well, that's it. That's all we have for you on our news today. Let's take a very quick break and we shall be back with more. All right, welcome back. You're still watching Markets Today right here on Metropole TV with yours truly, Nina Shaban. Joining me on set is Mr. Martin Wirigi, who is a Senior Associate Research at the SIB now. Good evening. The story that has been making headlines today, especially in Kenya, is Safaricom and the fact that it's just released its financial year report. Now, jumping right into it, what would you say about Safaricom's performance at the NSE today, considering the fact that it went down by 1%?
Okay, Safaricom released results today. Mm-hmm. The market was down, I think, because probably the market anticipated quite a spike in profits. 14% is not, in this environment, it's pretty commendable. Mm-hmm. The special dividend was, of course, was not expected, but coming into context that yesterday's price jumped up 5%.
Yeah.
So this today's results announcement, it's more of a retracement of yesterday's spike. Also putting into context the dividend yield, because with yesterday's price, you're talking about a dividend yield of 6.3, 6.7%. Mm-hmm. So any new investors coming in, you're talking about a depressed dividend yield. So that's the reason why I see that a bit of a retracement today. 1% is a bit of a retracement, mostly on foreign trading. Yes.
Oh, of course, mostly on foreign trading.
Yeah.
And now, has there been an impact of the excise tax increment introduced in the current financial year?
Yes, there has. Mm-hmm. There's the bit because the the management actually acknowledges that they could have lost approximately R1 billion shillings, knowing that in September of 2018, the government increased the excess tax on both data and telephone to 15% and mobile M-Pesa, that is, to 20%, from 10 to 20%. So that had an impact on the growth of both income streams. We noticed that voice was generally flat, and mobile data as a whole actually just grew by 8% vis-a-vis 22% the previous year. So definitely it had an impact on that front.
All right. And moving on swiftly, what could have driven the board to declare the special dividend?
From the statement they're talking about, they have a pretty strong cash position, which they're debt-free. And then from the projections that they've done, they're seeing clearly that they won't need as much cash, because they already have enough operating cash flow to cater for any capital expenditures that are coming across. And one of the things as financial analysts, you'll notice that we always check what you call return on equity. So if you're giving out cash, you're basically reducing your equity, thus, for lack of a better word, massaging the ROE, the return on equity. It's a good move in that there's no need of you having idle cash in your balance sheet. You're just better off rewarding your investors. Yes.
You might as well just to, keep them. Now, what does the succession planning look like? First of all, is there reason to be worried that Bob Collymore is leaving?
Not at all. Actually, from today's statement from the media, there's a media interview. He said he will be on until he has a year to go. And the board is actively looking for his successor. But from last year, I think everybody can see from last year's unfortunate event that he fell ill, that there was no vacuum left in the firm. So it's a pretty well-run institution, and investors should basically not to be worried at all with how the succession plan will play along. Yes.
Now, I'm going to digress just a bit. There's been that back and forth with Kenyans, especially when it comes to whether he should be locally hired or he should come from a foreign country, as per the last two CEOs. What are your sentiments on that?
This is a tricky one. I'll basically say that the board, seeing how the board handled when Bob was unwell, they basically were able to make sure that events are running smoothly. So whoever comes into play, I think will be very well fit to run the institution, knowing how the board did last year. So I don't want to be drawn into who might or might not, if it's a foreigner or a Kenyan. Yes,
all right. Now, okay. Yeah. Let's get back to business now. What does the merger between Telkom and Airtel mean for Safaricom?
Safaricom is viewing it positively, and even I think analysts and investors, I think it's a positive view, simply because now as a merged entity, there will be less talk of the dominance play that Safaricom does, the Safaricom plays. In my view, I use the word dominance very loosely, because clearly Safaricom has gone ahead and invested a lot on its infrastructure. You're talking about capex on average of 35 billion every year. So that is pretty much showing you how much a company has really positioned itself to be where it is as a market leader. So I know I'll probably draw a lot of daggers in my direction when I say that why should somebody be punished for their success? That is honestly, from my view, from my point of view. Yes.
All right. Now, taking a look at the evolution service revenue, if we could just have those the charts on screen. I don't know if that's possible. All right. Now, if you take a look at the difference, We have, just to get a bit into technical, Safaricom, yes, it did increase their mobile data from 11.9% in the former financial year to 16.1%, but still did not do the very best. Could you say this is it did not do as well as expected? Would you say this is due to the competition from the rest?
Partly, I think it could be a combination of factors.
All right.
Safaricom itself reduced prices and bundled a lot of the data, mobile data. Secondly, competition is quite a story because it's quite a mover, definitely. And there's also the element of excess tax as well, because excess tax, of course, played a role in it. But what Safaricom did, which was commendable, in most of the excess tax increased, they had to segment it such a way that the lower pyramid, the lower end, do not get the hit. They transferred the extra charges to the upper segments of their user base. Yes.
All right. And what about the SMS? We can see we have
A decline.
a decline from 9.7% to 7.3%.
Cannibalization of internet messaging services. Basically, your WhatsApp is eating
Across the board.
across the board. Yeah.
Not only in Safaricom, but in also...
Most likely in all that.
Yeah.
And then now, even the monetization element, you'll notice that right now it's not like previously whereby you had to be charged for every text message. Right now, they're all bundled up.
Yeah.
So that is quite a very big.
That they didn't really make a loss. It's just across the
It's
the
across
board.
the board. Yes.
Yeah, it is across the board.
Yes.
And Safaricom contributes to 6.5% of the country's GDP. What does this mean?
It's a big player. It was noted as a physical risk by the Treasury in that, if you remember how long ago, when M-Pesa was down and then almost everything was grinding to a halt, shows you how big of a behemoth it has become. And personally, I'm pretty pleased that they've done increased investment to the service. With last year's capex, they're able to increase the M-Pesa transactions per second from 900 to 1200. So that shows you how much they know how big of a role they're playing in the economy and how much they're taking into making sure that things run smoothly.
Things do run smoothly.
Yeah.
And we are going to delve deeper into that. Thank you so much, Martin. It's been a pleasant few minutes of bringing us up to speed on what's going on in the markets at the NSC. And our main focus today was Safaricom. I'd like to take a very quick break, and we should be back with more. All right, welcome back. You're still watching Markets Today right here on Metropole TV. And with me in studio is Ian Muriithi, who's an investment analyst. A very good evening to you. Thank you so much for joining us on set. Now, Ian, I'd like us to delve into Mata Safaricom, which is a company that has really made headlines today. But before that, let's take a look at Brexit and its outlook and its effect on Kenya, on Kenya once UK leave. Now, just to bring you up to speed, and we had a look at this story, and if my director could give me the video just after I bring our viewers up to speed once again. Kenya is optimistic that there will be no disruption to trade with the United Kingdom as it charts its way out of the European Union. Foreign Affairs Cabinet Secretary Ambassador Dr. Monica Juma said this and expects its exports to the UK to continue accessing the UK market on a duty-free free basis. The Foreign Affairs Cabinet Secretary said this during a joint press conference earlier today after hosting the Foreign Secretary of the United Kingdom, Jeremy Hunt. Let's take a look. your sentiments?
I think it's a very important initiative by both governments to come out and rather and clear the air as to the status of the trade between the two nations. As you recall, Kenya remains one of the largest exporters to the UK in terms of horticultural produce, and as such, given the huge contribution to our economy in terms of its contribution to GDP, I think it would be very essential to clear the air as to what would happen in the event that the UK exits the European Union. And this would go in a long way to alleviate the sort of tension that has been there for most of the local producers, because they get to import their products, or to export their products to the UK on a duty-free basis. As such, if there would be a change on that, then it would ideally mean that possibly their returns they get from the exports may reduce if there's any reduction in those duty-free taxes, and as such it means that they would be in a much worse position that they are currently. As such, so we expect that if they would come out and give clear assurances, then ideally it will go a long way to alleviate some of the fears that we have from most of the local producers.
All right. Yeah. Okay, thank you very much. And with that said, let's move very quickly towards Safaricom. And just clearly and in layman's terms, break it down to us what exactly it means by Safaricom contributing 6.5% to the GDP, to the country's GDP.
Ideally, what it means is that if you look at the value of all possibly transactions, all services that are sold by Safaricom to the Kenyan population, ideally, if you look at it in terms of how much is it compared to Kenya's annual GDP, it would roughly be 6.5%.
Yeah.
So that means that ideally the services that Safaricom sells to each Kenyan, a majority of the population, if I may say so, remains extremely high. And if I may recall, there was a time there was an outage of M-Pesa for around a day.
Yes.
And if you remember, there was a significant, and even the national government came out and asked for what may have caused the outage, and if or the corrective measures the firm was taking towards it. So it comes to show the large contribution it has, mostly to the GDP, and I think most of it is on M-Pesa and data. Yes, so I think those, if you look at the value of all those services and products Safaricom sells to the Kenyan population, it's 5% of our GDP.
All right. Now, Fuliza did extremely well, and saw profits of 45 billion, revenue, sorry, of 45 billion shillings.
Yes.
And that's just in a few months.
Yes.
Let's put aside the fact that Fuliza put in a revenue of 45 billion shillings. Okay. What does this say about Kenyans and borrowing?
Fuliza mostly, it's normally used as an overdraft facility. So Kenyans mostly use it to maybe pay out some short-term overdrafts or maybe shortfalls in terms of the cash they have. And I think it points to the huge demand and the huge market that we have out there in terms of short-term credit available in an instance. And I think it points to possibly in the most far sense that I think the demand for credit continues to increase. And demand is mostly on the short term, any period less than 1 year. And I think Safaricom was very clever in terms of exploiting that market using one of the largest penetration platforms in M-Pesa. So that, I think, points to an increased level of demand for credit that may not be available elsewhere at a probably cheaper cost.
I think that's true. Yeah. Okay. All right. Now the government has a proposal to have mobile banking services acquire a banking license. Your thoughts on that?
I think it would be important to rope in some of these mobile banking services towards the regulated space, because most of them, if you look at mobile banking, not only mobile banking but also the mobile credit facilities, they tend to be unregulated, and as such it may be difficult for government in terms of enforcing policy in terms of the cost of credit the common Kenyan is going to incur. And by roping in these additional mobile banking, mobile credit, microfinance facilities, I think it would be extremely positive because given the current extremely fast growth in terms of the mobile lending by Kenyans. So I think the government may move towards that segment to simply try and see how it may be better placed to protect the Kenyan consumers.
Do you see it affecting the different mobile companies? Let's say now Safaricom, do you see it affecting the Safaricom revenue or profits?
The effect may be marginal because given Safaricom's huge customer base, but I think firms that are likely going to experience a significant impact are especially the relatively smaller firms who are likely to witness probably increased competition in terms, because if you get to a scenario whereby pricing is regulated, I think customers may opt to transition into the better services they may be offered by some of the larger players.
Yeah, that the smaller companies cannot offer.
They cannot offer. So I think by triggering that competition, the smaller firms are likely to bear the brunt of that shift in regulation, but the larger players will likely still continue enjoying the economies of scale.
All right.
Yeah.
Well, thank you so much. We have run out of time, but that was a very insightful interview. That was Ian Mureli, who is an investment analyst, and that's it for Markets Today. My name is Nina Shaman. Please do enjoy the rest of your evening and don't go anywhere because Metropole TV has a lot of programming lined up for you.